Tesla stock is easily the most controversial stock in the entire stock market. Some analysts think that Tesla stock is going to be worth a measly $17, whereas others believe that Tesla will be worth at least $3,000 by 2025. Elon Musk recently told his employees that if Tesla executes well, then he agrees with ARK's price target for Tesla of up to $5,200 per share. With all this controversy surrounding Tesla stock, it's difficult to find the actual intrinsic value for Tesla stock. Our channel has created a couple videos on Tesla's business fundamentals, all of which cover every aspect and argument about Tesla. Will Tesla stock rise to $5,200, or is it heading towards an inevitable decline? Keep watching this video to find out more about this. By the end of this video, forecasting information would be used to estimate an intrinsic value for Tesla stock. This will include all qualitative and quantitative attributes that will help us investors determine the real value for Tesla. The perfect case assumes that Tesla ramps up its vehicles in a perfect fashion. Giga Berlin and Giga Texas both start small-scale production in 2021 and ramp up in the following years. Tesla's production timeline also starts early, as the Tesla Roadster, Cybertruck, and Semi all start small-scale production in 2024. The $325,000 Tesla starts production as well. Most importantly, full self-driving is going to be solved in the perfect case scenario by 2023. Full self-driving passes human capabilities, and by 2025, Tesla would most likely gain government approval for a robotaxi network to top it off. Tesla Insurance, Tesla Superchargers, and Tesla Energy all scale worldwide. The Tesla bot prototype is also released in 2022 but only starts production in 2026. I estimated that this scenario has a 1 in 5 chance of occurring, which will be very important soon in the bull case. The main difference is that full self-driving passes human capabilities by 2025. As a result, Tesla may never gain government approval for full autonomy. Another difference is that the Roadster and the $25,000 Tesla are delayed by 1 year compared to the perfect case scenario. The Tesla bot prototype is also delayed by 1 year as well, and only goes into production by 2028, which will not be included in this model. My valuation model will project all the possible scenarios for Tesla's business until 2026. I estimated that this bull case has a 25% chance of occurring. And in this best case scenario, I assume that Giga Berlin and Giga Texas will start small-scale production in 2022. Because of this projection for Tesla's production timeline was also slightly delayed by 1 year, this scenario also assumes that Tesla's full self-driving software passes human capabilities by 2026. Additionally, I estimated that Tesla Insurance, Superchargers, and Energy all ramped up at a normal pace. Another difference in this scenario is that the Tesla bot prototype was estimated to be released in 2024 and only went into production after this valuation model. I gave this base case a 45% chance of happening. Lastly, the bear case is what every Tesla short seller wants: a massive battery shortage that delays production in Giga Berlin and Giga Texas back to 2023. This affects the production timeline as well, which is delayed by 1 year compared to the base case. Full self-driving is also expected to improve at an extremely slow pace as it hasn't passed human capabilities. Tesla Insurance, Superchargers, and Energy also garner very little traction right now because of a shortage in raw materials for Tesla's vehicles and batteries. Finally, the Tesla bot fails miserably in the bear case as Tesla manages to create a prototype by 2025. I estimated that the bear case has a 25% chance of occurring. Everything we just talked about was mostly qualitative, but to find the intrinsic value for Tesla, actual quantities are requested in this spreadsheet. I estimated and calculated the future potential of Tesla's business in every scenario to start with. For vehicle deliveries, I projected a wide range of vehicles sold in each scenario. In the bear case, Tesla's production capacity only increased by 3.1 million vehicles by 2026. This is a major difference compared to the perfect case where Tesla delivered over 9 million vehicles by 2026. These delivery numbers are based on a range of growth rates which range from case to case, and you can see how the growth rates trend downwards over time. This was done under the assumption that it would become more difficult for Tesla to ramp up at a larger scale of production. The vehicle projections that you just saw were based on Tesla's estimated production timeline for new and existing vehicles, which I estimated within each scenario. In the perfect case, Model Y production already reached its highest percentage by 2022. From 2022 to 2024, the Cybertruck's release will have an impact on Tesla's growth, and by 2024, the $25,000 Tesla would begin its production ramp-up. I used used a similar trajectory for the bull case, but with a slower overall production ramp-up. For example, the Cybertruck began production by 2021, but did not reach its maximum percentage until 2025. The $25,000 Tesla also had a slower ramp-up compared to the perfect case in the bear case. I assume that an even slower ramp-up occurred in the bull case. The bear case assumes that a massive battery shortage occurred. As a result, estimated vehicle production slowed down substantially using the percentages that we just talked about. I calculated Tesla's average selling price per vehicle over time, and each case's trajectory varied based on how quickly Tesla's new vehicles were ramped up. The next component was full self-driving. At the beginning of this video, we went over how each case had different estimated improvement rates for full self-driving. These qualitative attributes were translated into an estimated percentage of the vehicles sold with FSD over time. I also translated the improvements in FSD to estimate the price of FSD over time. In the perfect case, full self-driving reached full autonomy, which led the price of FSD to reach $25,000 by 2026. On the other hand, in the case, the price of FSD only reached $16,000 by 2026. Based on the projections that we just went over, I calculated Tesla's estimated vehicle revenue up until 2026. All of Tesla's vehicles need to be insured, which is where Tesla Insurance comes into play. Tesla plans to dominate the insurance industry with its insurance product. Data is practically gold in the insurance world, and Tesla has the most data about its vehicles. Tesla Insurance is currently available in a limited number of states, but is quickly expanding across the United States. Tesla Insurance has done quite well so far. As demonstrated in this projection, we see the rate of expansion in Tesla Insurance by estimating the percentage of Tesla vehicles that would be insured. Then, I projected Tesla's revenue per insured car using relatively conservative numbers. These two estimates were then used to calculate the total revenue for Tesla Insurance. The next key segment for Tesla is Tesla Energy. The products in Tesla Energy include the Tesla Powerwall, Megapack, solar panels, and solar roof. The Tesla Powerwall is a battery system for homes that costs $10,500. After installation, this is a popular product for people with solar panels that want to store their energy for short periods of time. The Tesla Megapack is a larger version of the Powerwall and is primarily used by utility companies. Both of these products are reportedly sold out for quite a while. Tesla offers the cheapest solar panels in the industry and guarantees this with its price match policy. Tesla Energy is still in its early stages. As a result, my revenue projections varied a lot from case to case. In the perfect case, the annual revenue for Tesla Energy reached $40 billion in 2026. The growth of Tesla Energy ultimately depends on whether supply chains can successfully ramp up production. If there are enough batteries in raw materials, then the price in this sector will continue to fall and drive more demand. In the case of the raw material shortage, Tesla Energy would likely be put aside, as we saw Tesla do this during the Model 3 ramp-up, the next segment. Overall, growth is expected to remain strong. At its current price of roughly $900 per share, the stock trades at around 155 times Census 2021 earnings and about 16.5 times 2021 revenues. Tesla's market cap also stands at about 3 times that of Toyota, the largest car maker in the world today. What do you think would be the highest point of Tesla stock? Let us know in the comments.